All things must eventually come to an end. There is something I've been trying to avoid for longer than I can remember, but despite all my efforts I can't battle against it anymore. And I've got no option but to finally admit defeat. I'll reveal all about that a bit later on. But first, my monthly passive income report for November. In this video, I'll show all my dividends from shares as well as my biggest premium bond win of the year. And if you stay to the end, I'll reveal everything I've been buying and selling, including a new UK company I've bought for the very first time. November is not usually a great month for dividends, but let's get straight into it to see how much I received. This is not investment advice and I'm just showing you my own journey. On the 1st of November, it was the turn of British American Tobacco to pay out. The shares are up 28% this year and the dividend is very high at almost 8% spread over 4 payments a year. The company has had an amazing dividend record, having increased its payout for 25 consecutive years. However, as it transitions across into more expensive next-gen products, its margins will be under greater pressure, and there is likely to be less cash available to pay out dividends. The new products, such as vapes and other alternatives, are facing increasing restrictions. I certainly have no plans to add to my holding. This month, British American Tobacco paid out a total of £225. If you want to know how much I hold in each company mentioned, then I've listed the totals in the video description, along with some offers which could save you some money. On the 8th of November, I received a payment from Persimmon. The company is the second largest listed house builder in the UK and it's had a terrible year, down 9.2%. Dividends are decent at 4.8% spread over 2 payments a year. Slowing housing completions and also rising building costs have put downward pressure on the share price. Dividend payments can be rather cyclical in the housing sector. I've a relatively small holding in Persimmon and I plan to buy on the dips. This month, Persimmon paid me a total of £10. On the 28th of November, I received some cash from Greencoat Wind Energy. It's a sector benefiting from government backing and renewed investment. The lifting of a de facto ban on onshore wind farms should be a long-term boost. Profits, however, are of course weather dependent, and this year has not been so great for the company with the share price down 16%. On a more positive note, the dividends are fairly high at 8.7%, and for those looking for a steady income, this might be worth considering. Dividend growth is impressive also, with the company able to raise the dividend year after year. This month, Greencoat Wind paid out a total of £185. On the 22nd, I received an early Christmas present from Tesco. Cost-cutting and productivity improvements are having a positive impact. The share price is up 25% this year and the dividend is a very reasonable 3.4% spread over 2 payments. Dividend history has shown an upward trend over the last 7 years or so, and I'm happy to hold the shares for the long term. This month, Tesco paid out a total of £140. Now on to the monthly premium bond draw. I use premium bonds as my emergency fund, kept out of the market on purpose. The prize rate has now been reduced from 4.4% to 4.15%, and from January 2025 it will be reduced further to 4.0%. There is one draw a month, your capital is safe, and you have easy access to your money. There is a chance to win £1 million each month and all winnings are tax-free. First, the big winners for November. The first £1 million winner was based in Warwickshire and held a full amount of £50,000 in bonds, and the second jackpot winner was based in Cornwall with a holding of £38,000. No £1 million for me this month, but I did manage to win 5 prizes, totalling £300. The bar on the left shows what I would have expected to win in premium bonds so far this year, with average luck and the full amount of £50,000 invested. The bar on the right shows what I've actually won. It's not been a great year for premium bonds, but it's just my emergency fund, so I don't really mind, and it's something to look forward to each month. So my total passive income this month was £860. However, there is something I need to tell you. Something is about to change. The taxman's claw has finally arrived, and there is nothing I can do. You see, not only do I have a stocks and shares ISA account, but I also have a general investment account. So when I fill my ISA, I can still carry on investing. I try to keep the lowest dividend paying shares outside the ISA so that I don't exceed the non-ISA dividend allowance, which just a few years ago was a whopping £5,000, but sadly this has been reduced to just £500 a year. I knew I would exceed this at some point, and that time has now arrived, and the creature needs paying. So for the first time on this channel, I'm going to have to pay the claw. Fortunately this month it's only £5, but I just know that claw will be back for more of my money very soon. Now for the overall passive income summary. The green bars on this graph show my passive income for the first 11 months of last year, and the blue bars are for this year. You can see that November is not the best month for dividends. This graph shows how my average monthly dividends have changed since my journey began. This does not include premium bond wins and is only share dividends. The fall in 2020 was due to the pandemic, when many companies cut their dividends, but they recovered quickly. At the time of this video, I'm now receiving an average of £1,393 a month in share dividends after tax. I'll shortly reveal everything I've been buying this November, including a UK company I've bought for the very first time. But first, a quick look at the FTSE 100 ex-dividend dates for the month ahead. Just 8 companies go ex-dividend in December. If you own the shares before this date, you are entitled to the dividend, which will be paid to you on the payment date. As an example, I own shares in British American Tobacco, which goes ex-div on the 19th of December. I'll receive just under 59 pence for every share held, and this will be paid to me on the 3rd of February. Here are all the payment dates for December, and there are quite a lot of them. December is usually a great month for payouts. I'll be expecting dividends from all the companies highlighted here. This screen shows the highest yields, with Phoenix Group top of the pile with a yield of over 10%. Very high yields, however, are sometimes more at risk of a dividend cut, something which happened recently to Vodafone and Rio Tinto. The average yield of the FTSE 100 is 3.6%, and my own portfolio is lower at 3.3%. The yield on the amount I've put in since the start, however, is much higher at 6.1%. So what have I been buying this month? Well, the US market has been doing fairly well this year, up over 27%. And I've been buying into this momentum, and have added more to my S&P 500 ETF. I intend to carry on buying this one in the months ahead. I've also bought more BP shares. The price has fallen 18% this year, but oil tends to be a cyclical sector, and I see it as a bit of a bargain at the moment, and I couldn't resist snapping up a few more shares at these lower prices. And now for that new addition to the portfolio. The company distributes a range of products to businesses around the world, including machinery, chemicals and packaging. It is currently the 39th largest listed company in the UK, and its name is Bunzl. The shares are up 12% this year, and over the last 5 years it's up 67%. Although the dividend yield is below average at around 2%, it's been growing very impressively over the years, a very good sign indeed. To grow long-term wealth, all you really have to do is buy fewer liabilities and buy more income-producing assets. And to see how, just click this video here.